Yeah, what's happening all? It is January 20th, 2021. It's typically a Tuesday when I'm making recording, and it didn't work out because we had MLK Day on Monday, which is a federally recognized holiday. We weren't open. Most banking institutions were not. And then yesterday came about, and I thought it was Monday. It really one of those strange things, right? So we're doing a Wednesday instead of our Tuesday, just because of my perception of time was off. But what I want to chat today about is LLCs. Now, I'm no attorney. I'm no CPA. I can't give you instruction on how that works or how to do it or how to go about those things. I can't give you, reasons why or why not. But what I can tell you is that it is definitely something that a lot of people tend to do. And a lot of people ask a lot about it, want me to give them information on what they should do and how they should set it up. Let me just tell you, I can't say one way or the other about that when it comes to LLCs. What I can tell you is we are a conventional lender. We use your Fannie Freddie type products. We do conforming loans, which we up into that 541,000. I think I can't remember what the conforming loan limit is. Go ahead and Google that conforming loan limit, right? So then you get to see exactly what the maximum loan is for Fannie and Freddie. Certain counties, high cost counties, many of them in California, will have a higher loan limit. That's referred to as a conforming high balance loan. Those high balance loans will have a higher interest rate, because there's a lot more risk on that bigger loan into a one individual situation, right? So there is not going to be the same rate for as a regular conforming loan, that 540 plus thousand down, right? I don't have the exact number in front of me, sorry. But when it comes to that, we do it into individual names only. We can also do it to a living revocable trust, right? So that's another thing that we can have our legal side review anything you've built in the form of a living revocable trust, make sure it fits the requirements. That's it. Your personal name or a living revocable trust. That's the only ways that we can do a loan on a property when it comes to being titled. If you're titling it in your personal name, we can do the loan against it. If you're titling it in the name of your living revocable trust, the loan will still be to you, but we can make sure that you can take title in that living revocable trust, provided it meets required guidelines. That's it. When it comes to LLCs, a lot of people want to put it in the name of an LLC. They want to purchase the name of an LLC. You can do that with different types of financing, not anything that I can do. And I do have one that I can do. It's a higher interest rate deal, shorter term. It's not a 30-year fixed. The rates are a couple points higher, actually probably a little over 3 points higher than where we're at right now. And there's other points associated with to buy that rate. So it's not like you're getting a rate and there's not more cost. There's more cost to that deal too. It's a higher risk loan. You're limiting your liability on it. You're therefore limiting what a person can, I guess, the recourse that a bank can take when you're lending money to an LLC. So know all those things. Now, when it comes to the LLC question that I get a lot, does it violate due on sale clause? That's something for you and your attorney to take a look at, right? I've seen a lot of people do it after the fact. I've seen them do it for a single member. I've not seen it come back and bite anybody in the ass. I have seen people do it with dual member LLCs, 3-member LLCs, partnerships, these kind of things where it has come back. I've personally seen in the past where whoever the lender is goes back to, listen, you're either going to put this back into your name or you're paying it off now, right? So understand that when you have other people that have ownership in the entity that has ownership in the property, they have claim. And if you're the one who is solely responsible on the loan and you have other people that have claim, that muddies it up enough that you're going to have a hard time with that. So think those things through when you're doing that. Talk to your attorney about that. Understand what you're getting into when you put multiple people on a entity that has ownership in the property that you're the sole person financing. You're putting yourself in a rough position. I don't care how great your relationship is now. It's amazing how relationships can turn on a dime. You can put decades upon decades into a relationship, and one act can destroy it. And what's interesting is the more you have vested in it, human beings are really, really weird individuals, weird animals, weird creatures, whatever you want to call them, in the sense that the more they have vested in something, it seems like the more they negatively react to something that puts that relationship at risk. So keep those things in mind when you're building it out. The other thing I can tell you, when you're trying to qualify for financing in the future, and you're using rents to qualify, think about this. You're using rents to qualify. You got a property that has a loan against it, right? You have a payment against it. You have a renter. We're showing that income coming in. and you're using that income to offset that expense. But you have now formed an entity that you've divided up the ownership of that asset, that cash flowing asset, with multiple other people, even if it's just one other person. What you've done now is you divided the income with those other individuals or individual, right? Could even be your spouse. It doesn't matter. You've divided that income up, but you still have sole responsibility for the debt. We're going to hit you with that expense, but we're going to divide up the income according to whatever your percentage is of that entity when we see that paperwork. Now you have less income to offset that expense. Now you're in a negative position, regardless of how much money comes in on that. Remember these things. There's a lot more to it. You've got to think it through. You got to think through all the future. Talk to the professionals that you're dealing with on this to be sure whatever it is you're dealing with here, that you're doing it in a way that keeps you solvent and safe, right? And there's a lot more things you just, is somebody going to sue me? You got to think through a lot more than that. All right, let's get into the market. Now, there's a lot going on here with this LLC stuff. Just know we can't do a loan for that. And a reminder, if you do transfer or you want to transfer it and you're like, hey, I need a letter, your attorney says, I got to get a letter from, you got to get a letter from your lender. You're not going to get it. I've not seen lenders give a letter that says, yeah, go ahead and transfer it. Just know that. Just letting you know. All right. All right. So the market is actually doing damn well. We are above every trend line right now, which just hasn't been happening a lot. So here we are above the 30-day moving average, the 100-day moving average, the 10-day moving average, and we're above the 200. We've only seen this a few times in the last little while. Very, very, very rarely have we seen it stay there and stay consistently above that. We're in pretty interesting shape right now, given the nature of where things are going right now in the economy, where things are going with all the stimulus packages, the risk of the intense stimulus that's coming because of what's happening today. I don't know. It's going to be interesting to see, but right now we're still in really, really, really good shape on the 3.0. The other ones they've come off of their bottom, but they're not completely out of the woods, I think, but I think they still have some room to run to the upside as far as the mortgage-backed securities when it comes to the rates for owner-occupied stuff. So they're starting to stabilize a little bit better than where they were before, because they were getting out of hand before. So I don't know what the future is going to bring when it comes to the economy and all that stuff. I'm very, very bearish on the economy. I don't have a whole lot of faith that we're going to experience a great economy in the future. I think the next few years is going to be really, really interesting to see how this all plays out. So get your cash flowing assets, make sure that you got yourself well positioned, have plenty of capital sitting aside for reserves, also have plenty of capital on hand for when, if we do see a housing hit, right? There's a potential it's going to happen. A lot of people were saying it could. I don't see a massive hit happening in our cash flowing markets, but it could be in some of those other markets, those high value markets, the Californias, your New Yorks, all those kind of stuff. We saw those things take a hit. Arizona, where I'm at, took a massive hit a few years back. And then people swarmed in and just got great deals and took advantage of great opportunity. Having reserves for that could be a good thing too. Things to think about. Really think about your business and making sure that you have plenty of capital coming in to maintain it, plenty of capital to deal with any sort of risks that are coming, any sort of changes to it, and plenty of capital to take advantage of opportunities, right? So I appreciate you guys listening. Appreciate you subscribing. Appreciate your support for the Operation Underground Railroad. Hit subscribe if you've never done that before. And then let's set up time. If you need to discuss your business more, reach out to us. I'll have my assistant set up some time so we can chat. Thank you.